Hey everyone, Mike Rosehart here. Talking today, like I do every single week, about personal finance, real estate investing, the FIRE lifestyle, FIRE movement, and really whatever the daily topic is that I decide. Today I've decided we're going to talk about the power of the internet, and it's very timely because of the things that have been going on in my life in the last couple of days. You guys don't know this, but since last week I have been very, very busy. For one, we are just before the 1st of September. Hey Zale, how you doing, comedy? Um, it's one of those. This is one of those weeks where things are intense and things are crazy. All of the students move in September 1st, and we've acquired a lot of new properties. As you guys know, I've been buying a property a week in the Corp. That was our goal that we set up. We want to average buying one property per week, at least for a year, and then we'll see from there how much we want to grow and expand. But in this time, we've acquired 12 properties in like 11 or 12 weeks. So now they're all closing right about now. So we have 7 renovations that are going to be underway all at once. So we're going to hopefully have 15, 16 people all working, independent contractors coming in and just trying to get things done. Appliance guys, there's a lot of logistic and coordination work that needs to go into this, as well as all of the tenant sort of logistical tenants for that, or can we do X or Y, and all of these things together. Very, very at the end of the day. So what we're talking today about in the power of the internet, down to me realizing that the internet has changed the face of how we invest. Hey Ellie, how you doing? By the way, shoot the questions down below if you have questions on real estate, personal finance, you want to know something about my lifestyle. I am fighting a bit of a cold. Again, my daughter got sick. She goes to a play group. She brings back a sickness. She coughed in my mouth, and I'm sick. Doesn't help that I've been sleeping like six, and I've been I hosted a journalist from Germany. She flew all the way here to London, Ontario, Canada to meet me and talk to me and learn about the FIRE movement and talk to some of the people in the FIRE movement. So very, very interesting that she actually found on the internet. Hey Michael, how you doing? Thanks, appreciate that. I was on Rogers TV today, actually, my first actual real television appearance today. So that's why I have a suit. I took the tie off because it was bothering me, but I am in a suit today. So I decided to keep that on, even though I was going through the properties. I was dropping materials off, grabbing things at different properties. I literally had a water leak at a property, and I mopped it up with a sock. With a sock, guys. And I was draining this sock in a like $700 suit. So it just goes to show how dedicated I am to fixing problems and to real estate, and how crazy I am to do that in a suit. I don't know why I did that, but I did that earlier today. And I sweated my butt off in this suit, so my undershirt is definitely gonna need it. Tommy, how you doing? All the regulars are popping on. This is awesome. We're talking today about what I've been up to, because we always start the first 5-10 minutes about giving you a weekly update, because this is sort of our chance to have that live chat, and you guys can let me know what you've been up to. But anyway, I'm sharing what I've been up to. And so anyway, on Monday, I believe it was, yeah, Monday in the morning, she came in, and she's a journalist, and she's been doing an article. She was writing an article for Dysite. You can look it up on Wikipedia. They have about 15 million active viewers online, and they have about 600,000 in circulation. They're the biggest newspaper in Germany, and Dysite is very similar to Time magazine in the United States. So they're very, very comparable in just that. Dysite almost translates 2 times. So very, very similar, I guess, level of popularity. So very excited for this article to break. Vicki Robbins, if you guys know, one of the best books you should ever read if you want to get an introduction to personal finance, and one of the first books I ever read on early retirement, just even before I found Early Retirement Extreme, written by Jacob Len Fisker, I actually found, of course, and hear my daughter in the background playing in the yard, Calling for Her Dad. I'll have to go out and see her just after this. So we're going to keep this short because I got a lot of things going on today. I got to run back out to some properties tonight and get some more stuff done still yet. But we were talking about her coming and doing an article on the FIRE movement in this book, Your Money, Your Life. And she actually interviewed Vicki Robbins, who I think is like 75 years old now. And in 1993, I think she was the first to write on the topic of retiring early, that you don't have to work your whole life, and that you can actually get control of your personal finances. And so your money or your life is all about choosing your life through, unlocking sort of financial independence, right? And choosing your life over your work. And just, yeah, it'd be amazing to meet her. I hope to meet her someday, but I'm glad to share some article space on that. And I'll share that article with you guys when it gets published. It's going to be in German, but there'll be a Google Translate so we can look at it in English. And I'm excited if that drops and people start looking me up on YouTube. We're going to obviously grow the following, which is fantastic. I don't know how I'm going to communicate with the folks in Germany, but hopefully a lot of them speak English as a second language, and we can have that sort of back and forth. So I'm excited for that. And today I was doing a segment on real estate investing, 30-minute TV segment with the host there, Stacy, and she's fantastic as well. We were talking about some of the trends in the London, Ontario market and real estate, talking about some strategies that I've used. My story is obviously one that's very unique in that I was able to accomplish this so young. So that's been very, very key, I think, to part of the allure of the story, right? People can see if someone can come from nothing and at 18 years of age become something by 25 that's financially independent, you definitely find that I think that there's some. I like to be very down to earth and very approachable, and I think that my story and my approach is very much one where what is the word I want to use? I think that it's replicatable. Replicatable is the word I want to use. That anyone could pick up my strategy and do exactly as I did and have the exact same outcome. Whereas if I had like an online internet marketing company, or had some business I was successful with, or something I grew up rich, or I had some advantage, if I had any of those advantages that are not replicatable, or I got lucky, then it wouldn't be it wouldn't really be something that would be so attractive, I think. And I want this message to get out there because I want to help people. I wish that I had found, this message, like these videos that I had now, I'd be even faster to fire than I was, right? And so that's what it's all about, is the cross-pollination and sharing of information. And last night, London on Fire, the journalists came out, and for those who came out, it was one of our best meetups yet. I counted 56 people at the peak. So 56 people, and then we dropped down to about 50 at London on Fire, right down Park. It was fantastic. There were some people that drove from Milton, from Hamilton, we've had people drive before from Buffalo across the border all the way to London, Ontario to come to one of our fire meetups. Really happy about that turnout, and big thanks to the group, to the other boys who were the founders with me, Matt McKeever, Kellen, and Dylan as well. So really, we're doing very well with that movement, and I think that the media is starting to catch on to this idea of fire, right? And we were talking about what is the appeal of fire, and why is fire, what makes fire so attractive now where it wasn't before? Like, is it something to do with a discontentment in millennials today? Is it to do with people aren't happy in the work that they're doing? Is it that the older generation was content with working their entire lives without or they found purpose in their work, right? And they didn't find purpose in travel, and it wasn't what they were after, right? And so I think it's the internet. I think the reason that the fire movement is positioned to succeed in the way that it is, and the way that everything's catching fire and everyone's all about financial independence, retiring early, is a few things coming together. But one, the internet. You can go out there, and before you'd be afraid to quit your job. Like, I would have been afraid if I didn't have mentors and people in my life that I could talk to and say, hey, you did this. You quit your job 2 years ago. How did it go? And they say, it's been fantastic. Like, look at my passive income. It's been coming in at a higher rate than my earn rate has been higher than my burn rate when it comes to my passive income. It's been fantastic. And then you can look at those role models and those people. You can reach out to them and say, is this working? And all that cross-pollination through the internet has made this very much plausible as well. The internet has made it very information is everywhere. It's proliferating everywhere. And so we have access to all this information in a way that we didn't before, and education is becoming something that's free, that everyone has access to if they can just get access to a computer. And I think anyone in the world can get access to a computer at a local library, or at least anyone in a developed world would have access to at least a phone to connect to the internet to find all this information at their fingertips. And if you research hard enough and deep enough, the answer to every question is there. I think people who sell information today, they have to do a very good job of packaging that information in a way that's very easy to digest, because the information's already out there. There are no secrets. There's nothing I can tell you on here that hasn't already been said on the internet. Nothing. There isn't, maybe something about my personal self, but there'll be no fact or interesting piece of information that you'll learn that hasn't already been shared. So it just hasn't been shared with you, and maybe it isn't easily found. It's in some dark, deep hole in the internet, but it is there. Everything is out there. That's the beauty and the power of the internet. And so that's why I've been exploring. Before, I was very resistant to social media, up until actually this year in March, when I started my YouTube account. I didn't want to put everything out there. I was afraid that it would come back and bite me in the butt by sharing too much, right? And people talk about the downsides of oversharing and putting yourself out there, for putting your neck on the line, right? And definitely something that I've been wrestling with. And now that I've put myself out here on YouTube, I've decided, what, I'm going to go with this. I'm gonna let the internet take hold. I'm gonna put myself out there. If people ask me to do an interview and they want to talk about, my story, and if that helps, 10 people, that's worth it if I get 2 haters. So let's see if I get some questions here. Going to jump in early on the questions. If you have any thoughts on capital depreciation on house hacks, whether or not it's a good idea, and touch on primary residences for the unofficial couples or how. Okay, so if you're an unofficial couple and you aren't common law, then you each could have a primary residence and it could each be tax-free on the capital gains sale. So don't cohabitate and don't get married. It's actually bad tax advice to get married. There is no advantage to being common law or married. You're better to own things separately. But you're talking about capital depreciation on house tax. So I am of the belief that when you come to the tax perspective, right, you have operating expenditures and you have capital expenditures. Capital expenditures improve the value of the property and have a longer useful life. Operating expenditures are things you need to do, like repairs and maintenance, that need to be done, that have no real impact on the value of the property typically, but you can expense operating expenditures in the same year in which, and against rental income in which you've earned in that year. And capital expenditures, you then put into a pool and you depreciate over a certain schedule, a depreciation schedule, over each and every year. But when you sell that property, you have to recapture all of the amounts that you've depreciated of the capital cost portion. So I'm a big fan of, if you can, be a little greedier on the operation side than the capital side. Like if you can split, you might say you renovate a bathroom and the floor was all banged up from the tenants, the flooring would need to be replaced. That's a repair, right? So the flooring could be a repair, but if you spend extra and put in a nicer floor than there was there before, percentage of that would be increasing the value and be a capital in nature renovation. And so there's that discussion of, is it capital in nature, is it OPEX in nature? And CAPEX in nature is treated in a disadvantageous way. So you don't want capital expenditures in the same way you want operating expenditures. They're better write-offs. So to kind of answer your question at a high level, if I haven't lost people on your, I don't. On my primary residence, I don't really depreciate the whole time. You have to recapture on sale anyway. And since it's your primary residence where you're living is tax-free on the sale, you don't care about your building up your capital expenditures. So I don't worry too much about my write-offs on the primary residence where I live. It's not as big of a thing. You could do that and then recapture. I guess you'd be tax-free on the sale anyway. So, or in the unit in which you occupied if it was multi-unit property lived in. So there you go. Hope that answers your question. Okay, let's go up and hit some questions. Let's start doing the questions. We're 12 minutes in. I got to try to get this wrapped up after 1 hour. So I'm going to try to go quick through the questions. If you guys have any, just shoot them out there. But yeah, the other thing I wanted to mention about the internet, we're talking about the power of the internet, is exchange traded funds. Up until now, you couldn't have a DIY, do-it-yourself, online self-directed brokerage account. You had to go through a broker. In 1990, like 1992, if you wanted to place a trade, you had to call a broker to place a trade. You couldn't just trade online. So everything's gotten a lot easier. You can basically managing your own stock portfolio, which is what you do when you're financially independent entirely, can take like now ETFs, you can buy a piece of everything and have low management expense ratios, where before you had mutual funds you could buy in the 80s, and they had high fees, 2.5% they would take every year, whether there's a gain or a loss. They would just take that fee each and every time. So it's one of those things now today, there's very low cost MERs, so you can invest in ETFs today using the internet. The internet has made the DIY average investor's ability to invest that much easier and that much more successful. So you can get a 2 to 3% higher rate of return today because you don't pay those fees to those brokers to buy and sell. You can trade on Questrade now. You can buy ETFs for free and it's $4.99 to sell, $4.99. Whereas before it was $50 to buy, $50 to sell. A lot of trade to trade stock. So the internet has made things very good. We are living one of the best times in history. People say, oh, it was way better back in the 90s. You could buy houses cheaper and this and that. No, today we're in the best, I would argue, there's no better time to be alive than today with the internet at our disposal. It creates a level playing field, I think, for people to rise above. I grew up very poor. My mom made below the poverty line income. And so it's very, very possible to, rise out of that class. Whereas before I would have had to go to a top elite school and there would have been, without the internet, I wouldn't have been able to do that. So I think today we're in the best situation we could ever be in. There's a huge opportunity for people who are willing to learn and eager to go out there and share that information. So I'm very bullish on the future of the world with the power of the internet and the FIRE movement catching on. I think a lot of us are going to be financially independent in the coming years. Sorry, I got a bit of a cold here, guys. Okay, let's hit up. Patel, how you doing? Yes, I've had a busy week, not a great week, but thanks, Michael Chung. Appreciate that. Martin, how you doing? Tommy, Jared says Google Translate. That's exactly right. Google Translate is fantastic. We're going to use that to translate the article from Daizite over into English. So you guys get to read the article on this thing called the fire movement and on me. I'm going to be a large portion of that article. So that'll be the first, I guess, large media article written. And she got to stay with me, and she literally went grocery shopping with me, and we bought $125 in groceries for like $16, and that was a really cool experience. I remember her um, looking at the receipt and be like, "Holy, I can't even believe this. This is amazing. I can't believe you're able to get deals in all these ways." And she said, "Well, what's the key thing?" And my key thing is I'm good at deals. Like that's the thing that I'm good at. I'm good at buying and negotiating every deal. When I buy a property, when I buy renovation materials, when guys do work for me, my own insurance, all of that is. I see some messages being retracted. Spencer Ritchie, I want to know what that message was. Michael Chung, I want to know what the message was. It's getting hot. We need to open the window in here. I'm cooking, and the phone is like lagging because it's so hot in here. So maybe just go outside and then open the window because it's so hot. I'm trying to close the window because my daughter's playing outside, so I apologize if there's feedback. But I'm in a suit, and these lights on me here, here, and here are very, very hot. Okay, let's keep going on the questions here. Okay. Everyone I met while I was in Germany spoke English. Geo Mercury, there you go. I guess pretty much everyone in Germany knows the second language of English, which is great that be able to interact with all these people who find this article. That'd be cool. That's gonna be me after I graduate. Zell Comedy, can't remember what I was talking about, but most likely I'm happy to probably coach you through whatever it is you're trying to do. Um, what do you think of the Windsor market? The cash flow there seems like an absolute powerhouse. Would you consider doing a joint venture in Windsor? Tommy, um, I'm not as bullish on Windsor as I am in London. Am with London. Windsor's market is still tied too much, I think, to manufacturing. Um, London is very diversified. We have a lot better diversity in um, the sectors in which we have employment, right? And I think that in Windsor you don't have that same amount of flexibility. In 2008, Windsor was destroyed. London was fine. Like real estate was flat here in 2008, 2009. We didn't even experience a down market. Things were completely fine. I like London because it's proximity to Toronto, so it's like an hour and 45 minutes. Windsor is far from Toronto. London was actually designed to be the capital of Canada. London, Ontario was going to be the capital of Canada. They made it Ottawa instead. There's a long story about that. It really is. It was designed to be, as a colony named after London, England. So as a colony of England, we were going to actually be the capital here in London. And I think London was poised to do that. I see a lot of exodus from Toronto coming to. I don't know that's gonna do to the prices. I think it's gonna pop up certain areas. There are a lot of bad areas in London to buy now. Like the really high end 500, 600, $700,000 houses are, I think, overpriced and the rents don't make sense. Um, what else about Windsor? I guess I have a friend who lives in Windsor, and I know someone who knows someone who was stabbed at a bar in Windsor. I don't know anyone in London who's been stabbed at a bar going to University of Windsor. University of Windsor is not even a good university compared to University of Western Ontario, Richard Ivey School of Business. We have the largest college, largest university. So if you're comparing London to Windsor, it's not even close. I'm still buying properties here that cash flow better than properties I'm seeing in Windsor. So, I mean, as long as you can still find cash flow here in London, I'm going to keep buying. If it gets to a point where I can't cash flow here in London, I'm going to have to look at other markets. But hopefully what's going to happen is there's going to be a correction or something that's going to allow cash flow to continue, or rents are going to come up, in which case then, again, cash flow would be fine. Here in London, we've seen rents climb about 30%. People think that wages haven't increased. Wages have increased significantly here in London. London has one of the highest income per capita, or per living cost here, I believe. Yeah, we have the highest average income per cost of living here in London as of last year. There's a report that I was reading. So London's a very affordable place to live. People tend to earn very good incomes here. A lot of nurses, a lot of people working in the university. There is manufacturing, ton of tech. We have financial. Windsor doesn't have a lot of that. Windsor's got a lot more. It's close to Detroit, right? It's got a lot of the. It When I drive in Windsor, and I've done a lot of driving in Windsor, it feels rough in a way that London doesn't feel. So I don't know. You can just buy in like crappy areas of London. It feels a lot like Windsor. If you're right in like in east, in the Soho, if you're in those pockets, it feels like Windsor. And London simulate Windsor if you want those returns and you want those headaches and stresses. I also just find Windsor to be far away, and so I don't want to go to Windsor. So I don't JV in Windsor. So if you want to JV with me, it's got because this is the market that I know like the back of my hand. I can read the crevices, and I know. I don't even have to look at it, right? I walk into a property and I know everything about this area. So I like to focus on the thing that I'm good at, and the thing that I'm good at is London, Ontario real estate. So that kind of answers that question. Okay, let's go up and hit some questions. Rosehart Media Snowball coming up. I don't know, Fraser, Sutherland, I don't know. Michael Chong, did you evict the tenant yet? Which tenant was I going to evict? I don't remember which. I evicted a couple tenants since a couple of Wednesdays ago. I don't know which tenant you're referring to. We got an eviction order on one of the tenants. We haven't pulled the sheriff in yet. They're going to hopefully leave at the end of the month. So we haven't pulled the sheriff on that one. We have the eviction order. The other place, still working on it. We have another place, we're still working on it. The bad tenants, like I don't want to rent to people who are, like I just don't want to rent to poor quality tenants that don't pay their rent. That, you know, these people really need help, and it's sad, but I'm running a business, right? So I can't have these people living there that don't pay rent, that have like 15 animals and just destroy the property. They're not, it's a business at the end of the day. I provide housing, and I take pride in providing good quality housing. I don't want to offer slum properties, and I don't want slum tenants because they create slum properties. So I prefer to target the working class tenant, someone who's working hard, who's got stable income, pays their rent on time, doesn't have a ton of, you know, pets or smoke, or all the drugs and all the things that go along with that. I don't like to deal with that area of the market. There are landlords who like to deal with that. That ain't me. Hey Jonathan, how you doing? We're hitting up some questions here, just chatting. So let's go up here and see what questions I got next. Okay, I read that question. Got this question here. We answered that question already. Jared, okay, says, I'm looking at a house, doing research and putting together a report on the house. I've been watching your videos. Anything I should do to present the deal to the investor? Okay. So it depends. It's just very dependent on the deal itself. You can look for things like if it needs a lot of repairs. That's something you can really look to milk and take advantage of. People tend in their mind to overvalue the cost of repairing something. So an ugly kitchen, someone's mind's like $8,000 negative on the resale value, but it costs you like $3,000-4,000 sometimes to put a new kitchen in. Or flooring, you know, it's like $3,000 to put new floors in everywhere, but it might weigh down the price of the property $15,000. So just if anything that needs to get done, any maintenance or repairs, that's all really, really important to getting the price down of the house. If you can find a common ground with, if it's a private sale, which it sounds like it is, if you're preparing a report for them, if it was on MLS, you probably wouldn't be doing that. You might prepare a cover letter if it was on MLS, so you can talk directly through the agents to the buyer. I'm a fan of the cover letter. I've used it a time or two. I'm just gonna put my feet up here. Okay, what was I saying? So strategies you can use to get the house price down. Be firm, right? Run the numbers. Show them the numbers, right? Put in some conservative estimates on the rents. Show them the cash flow. Show them all of these things. Pull out comparables, right? Go pull some comparables in the area and pick comparables that'll suit your need. So if there's some houses that have sold for, you know, not a great price, pick those ones and show those comps to the seller and say, hey, you know, here are, if you're just a private individual, right? So you can say, hey, here's some houses that have sold that are comparable to your house. What do you think about this price? These are the properties that have sold for X. I'm giving prices in the average of these, or discounted slightly because X and Y factors need to be taken care of for this property. So that's something that you can do to get the house price down. There's obviously some other factors too, actually. They're obvious to me, but not to you probably. People have different opinions on money, on their values, and so price isn't the only thing you can negotiate on. In fact, for some people, price isn't near as important as, for instance, let's think about, I was going to say, closing date, right? For some people, they want like a really long closing date. And on MLS, they're going to get like 30 or 60 days. Maybe they want to close 6 months from now. They want to take their time to find a new house, but they want to feel safe and that their property is sold. So you could give them a really long closing. I've seen closings of a year before. Now that's a bit risky, but you can do that. It's more risky for them than for you, mostly because it's going to probably appreciate the next year, and you've already locked in the price now. People do that on rent-to-own agreements and stuff when they don't adjust for inflation. So that's something you can play with as a time. The conditions are something you can play with as well. And then there's other things like helping them out. So if this is an older person and they don't know how to use the internet, for instance, and you know how to use the internet, take advantage of that and help them find another place to live, help them find another place to rent. They want to move into something, they want to rent. Maybe you can structure a vendor take-back scenario where maybe they hold the mortgage because they've got the property owned outright in cash or very close to. Maybe their mortgage balance is the same as the down payment you're going to give them. They can clear the mortgage and they'll hold the remainder of the purchase price as a vendor take-back. And maybe you'll pay them 4 or 5% interest, but you don't have to worry about financing it. They'll finance it for you. So the seller actually finances you as the buyer. And so there's an advantage there, I think, in that it's a win-win scenario where they can get a steady, they're acting as the bank. And so they get mortgage, principal payment, and interest payment each and every month from you. And if you default, they just take the house back. So, and keep your deposit. So you're not going to want to default to them. You're going to want to pay your mortgage to them. And that's a win-win where they get some steady income. Maybe that mortgage payment, the principal portion, that's like principal being them you paying down the balance of the loan, and the interest portion of that mortgage payment, because the mortgage payment is made of two pieces. And over time, the mortgage payment is usually a fixed amount, called $1,000. And over time, and in the beginning, it'll be $700 will be interest, $300 will be principal payment. But as the amortization schedule works, you start paying down the balance of the loan. So the interest you have to pay on that loan is lower because the balance of the mortgage is lower. And as the balance of the mortgage goes down, so too does the interest you have to pay on that balance that's owing, because they just calculate it straight up, your interest rate times the balance owing on your mortgage, and it's calculated on a daily basis. So all of that comes into play, and maybe that $1,000 a month pays their rent somewhere. And if they just sold the house, you just sold it to them for, they got cash from the house, and they had $120,000, they might burn through that really quickly. Or they might not know how to invest that. They might go put that in a treasury bond and make 1.25%. So you offering to take that capital, keep it invested in the house that they like, the house that they maybe have owned for years, and pay them 4 or 5%, it's secured in first position against that property, so they can take the property back if you don't pay. And they get 4 or 5%, and they were looking at 1 or 2% in bonds, or maybe they're bad with their control of their money. And so you can create a situation and architect something that's a huge win. And maybe they'll sell it to you for below what they would think they could get for this property on MLS, or what they think the property's worth, because you've worked out a sweet deal where they're getting $1,000 a month for the next 5 years. That's a huge win for them, right? So you have to think about it that way and position it in terms of find out what the seller's looking for and offer it to them. Even if they say they don't like vendor take back, maybe they really just don't understand it. So propose it to them and walk them through the options and explain to them how it could work. Say, would $1,000 a month for the next 20 years interest you? Well, yeah, that might interest me a lot more than just having $100,000 in my bank account. I love to have a steady income stream. I'm getting close to retirement. I really like that. Tell me more, right? Or maybe it's not about money at all. And often of the private sales, it isn't about the money at all. Whether they get $100,000 or $150,000, they don't even care. What they care about is the stress. They maybe have already a pension from their work. They have all the money they need each and every month. They just want to downsize. They don't have to worry about the stress of like having to fix things up, or having to have people come through their house and look at their possessions, and open houses, and their neighbors come in and see that they've listed their property. They just want it quiet. They want it to be sold. No stress. So you make things super relaxing for that person. They don't have to do a thing. Maybe even they have stuff, like they're a hoarder. They have a bunch of stuff they need to store. And you pay. You say, hey, I'll pay for storage for you for 2 years. And you rent a storage container or a storage facility for them, like one of those side-by-side lift gates. You say, here, I'll pay as part of this offer. I'll put it right in here. I'll pay for 2 years to store your stuff, so you can work through getting through all that stuff. That's huge value add. Someone says, wow, you're solving that problem, and you're going to move that stuff. You're going to hire movers and move it into storage for me. Okay, now I'm willing to sell my house. Whereas the realtor or some other guy came and knocked on the door, and some guy in a suit said, I'll give you $200,000 for your property right now, cash offer, no conditions. That isn't what they want. Purchase price wasn't important to them. Closing quickly wasn't important to them. It was the stress of what are they going to do with all their stuff, and they get nervous about all that. And most of it is emotional and psychological, and most people are not rational. A lot of us investors come at it from a numbers perspective. We're very rational, but most people are not rational, and they put value on those other things that we are maybe discounting. So that's something to kind of throw out and think about. I lost the other point that I had. Something in my brain up here. It's rattling around. I got this big sinus headache, so it's kind of hard to think of what the other point was. But at the end of the day, it's just creating a scenario where everyone kind of wins. So finding out what the seller's looking for, what's important to that seller, and then using that to kind of figure things out. So there you go. Hopefully that was helpful for you, Jared. That was a long rant. I apologize for the people who are like, oh my God, when's Matt going to be done with this question? Okay. How many houses have you bought? Zale, I haven't counted, but somewhere around 30, I think. 30 properties I've bought. Gonna scroll down, scroll down. To decide which would be the best property to claim as a primary, techniques for tax avoidance of appreciation occurring on multiple properties. You can't really avoid tax. Um, you could renovate the properties, and you could renovate properties and refinance the equity out. And when you refinance a property, all that money comes out. You have access to it tax free. If you sell the property, you're then going to pay capital gains less any write-offs you have in the property. So when we get access to equity, it's just to refinance the properties. Something to think about. Okay. Message retracted. Can people who are not good at negotiating deals still get decent return on investment? Future Wiz. Yeah, yeah. And I think negotiating deals is something that you can also develop. It's an acquired, learned skill. It's a practiced skill. The more you practice, the better you get at it. So that's something that you can kind of keep in mind too. Is if you're not good at negotiating now, you could become good at negotiating. You could become good at finding deals if you weren't before. And yeah, of course, you could join FIRE and find the FIRE movement and just invest without real estate at all. You don't even need real estate to be financially independent. I happen to use real estate because I like leverage. Leveraging 5 to 1 makes your return really juicy. So I use real estate as a way to hyper accelerate my journey to FIRE. But I would have been fired in my 20s no matter what. Even if I didn't buy one property, I would have just had hardcore saving for my full day job. I worked as an analyst, senior analyst, and a manager. And so I would have just saved my income from there. And my wife was working. She didn't make very good money either. But we would just save most of what we earned and invest that in ETFs, exchange traded funds, and so own a small piece of all the companies in the indexes in the world. So you buy a little piece of the international indexes, a little piece of the Canadian, North American, commodities, gold and silver, a little piece of everything, right? Small, like high growth companies, speculative plays, a little piece of everything, right? Some value investing plays, some utility companies that pay solid dividends, just all the different sectors. And you can invest in a portfolio like that, and you should be able to see a 7, 8, 9% return annually, recurring. So that means your money is going to double every 6 years or so. So your money's doubling every 6 years. That's not bad. That's the baseline. So you can get great returns without being a good negotiator, I think. And same in real estate. You can do that without being a great negotiator. You could buy not very smart and still do okay in real estate if you know how to add value to the property. You won't make as much money, but you still do great. Like maybe you get 60% rate of return or 50% rate of return or 25% rate of return. So yeah, totally doable. My message was already asked. My question was, what is your opinion on Windsor real estate market long term? Spencer Ritchie. Okay, Spencer, I think Windsor's going to be fine long term. Like I don't think it's going to necessarily be a bad market to invest in. I think it's more sensitive to certain changes in market conditions. And so there's a degree of risk. So you should expect with that increased degree of risk and that lower quality of tenant profile and the lower appreciation, you need to expect higher cash flow. And if you're buying 1.25% rural properties here, you should be getting almost 2% rural properties in Windsor. And so you can find those. I know people that find those in Windsor, but I'm finding great deals here in London. So I don't need to go look in Windsor for deals because I'm getting deals here in London. I'm sure there'll be a point where I'll run out of deals. I'll have so many investors wanting the properties that I can't even find enough to satiate the hunger, in which case we have to hire a team to find the deals. But yeah, so those are my thoughts on Windsor. And again, I'm not super up on. Hey, Rocks, how you doing? Aren't crime rates high in Windsor? Yes, crime rates are high in Windsor, higher than some other cities. Yeah, from my understanding, I haven't checked recently, but a couple of years ago, yes, they were higher. I grew up in Sarnia, Ontario, so Sarnia, Ontario has some higher crime stuff too. Have a big problem with meth. It's a rough town too, and very much tied to the Chemical Valley. So Esso, Suncor, like all the plants there, and all the people working in the plants there, like that's the whole industry for that town. So Sarnia is a very risky town compared to London being more stable, having a diverse employment and economic climate. So I'm a bit more bullish on London than I am on Sarnia. I'd like to see still a correction. I think that if we're buying smart, we'll be okay in a correction. I could see a 5-10% price reduction in London and still be okay. A lot of people will be underwater, but I'd be okay. My investors would be okay. Future Wiz. I live in New York. When I do invest, do you think I should do it in my backyard where housing prices are through the roof, or go really far away from me, like Indianapolis, for cash flow. Um, it is impossible, I think, to cash flow in New York. So don't buy properties in New York. I wouldn't. If I lived in New York, I would not buy real estate in New York. I'd probably buy into a REIT, or I'd go find someone in another market and I'd partner with them and have them actively manage in that market, because you want a local partner that lives there, a local manager that lives there on the ground in that area that's having the payment each and every day, knows everything about that. If I was going to do it, if I was going to be living, if I had to move down to Vancouver, I'd probably partner with someone here in London. I have some people I know who I could partner with to run all of the properties here, and I'd give them a cut of the profit. And that's how I'd probably do it, because I wouldn't be investing in Vancouver or Toronto or New York or even LA. I don't know how, other than appreciation, which is very risky, how you can, yeah, no, I'm not an appreciation investor. It's a bonus. You plan for it to happen, but you don't rely on it. So you want to make money without the appreciation. Jonas, how you doing? I saw your message pop up and I saw it retracted. Michael Chung, why do you think there will be a correction? Okay, so I'm just speculating. I'm just guessing at this point. But based on the prime interest rate hikes we've seen, looks like we might see one or two more prime interest rate hikes. We should see a recession in, typically, if you look at historical data, between 18 and 36 months from now. So we should see a correction in 18 to 36 months from now. But if rents continue to climb, then the rental properties that I'm buying will not have a correction. So when you say there's a correction, right? Like certain houses in the market will not correct. Like the house I bought for 125 grand with one of my investors here in London, in East London, detached, two-story house. Not in the best area, but that house will never drop below 125. In a correction, here in London, if we had a correction like there is in Toronto and it spilled over into a contagion market like London, we would, Northwest London properties might drop from 600,000 to 500,000, but that property would be it's probably worth 150 right now, really. It might drop to 135. So I'd be still above water because I bought smart. So yeah, I think we have to think very critically about how a recession affects things. Often, I think the correction that's going to happen is prices are going to be flat, very, very flat, and things are going to sit on the market on average. So days on the market will be long, I think. And so what that means is that prices might not really, we might not see a big drop, like prices might stay relatively flat. People aren't going to want to sell their houses for losses unless they're in financial turmoil. And so you might see some rental properties where that will happen, but if their cash flow is strong, should be okay. So my thoughts are certain markets, certain areas and segments within this market will be okay. It won't affect the market as a blanket statement. Like things don't just drop 10%. They drop 10% on average, certain areas hit 20%, certain areas are flat. So that's sort of something to think about. What is your ratio of good tenants to bad tenants? Don Davies, how you doing? Right now, of tenants that I've placed, 98% are great, good tenants. Of tenants that I've inherited in properties I bought where the landlord made me take, I couldn't get vacant possession, I had to take the tenants that were in the property to get the deal. Probably like 80% of those tenants are bad. So I'm working through those tenants. Most of the tenants I inherit have paid low rent, bad tenant. The garbage everywhere, a lot of big dogs and cats and pets and all the negative things you don't want in the property, destroying your house. So yeah, like the bad tenants I have are ones I inherited. Almost all of them are ones that I inherited, not ones that I placed. So good screening and good process in how you select your tenants. It has all the factor and all the power and how things turn out for you. But sometimes getting good deals requires you to take bad tenants. So I've got a bunch of those bad tenants that I've inherited from properties and I'm working on phasing out of the properties. It's quite a process because there's a lot of rights for the tenants. Unfortunately, these scumbags of society have more rights than the property owners. Makes no sense. I think the good tenants should have more rights, and I think the scumbag tenants should have less rights. The ones that destroy property should be thrown in jail. If you go into a store and you steal $10,000, you get thrown in jail. You steal $10,000 from me from a property, nothing happens. It takes me forever. I can't even get it in court. These guys get away with doing whatever they want. They could rip an appliance right off the wall and steal it, and they disappear, and there's nothing you can do. So, Michael Chong, if the differential point between your fixed and variable, if your variable is more than half a percentage point, so we're talking 50 basis points, it's when half a percentage point difference, go variable. We're seeing some like 3.79 5-year fix and then some like 2.8 5-year variables, 3-year variables. I would go with the variable because I think we're going to have 1-2 more prime rate hikes. So think about it, you're going to get this really cheap rate now until they hike it. Then when they hike it, you still are going to be lower than what the fixed rate would have been. So if we're only going to have 1 or 2 prime rate hikes, even if we had 3 and the rate got higher for a point, you had that whole year or two until that happened where your rate was lower than the fixed rate. So you end up overall ahead. Variable mortgages have outperformed from a pure interest cost perspective. Graham just did a video. I just watched Graham Stephan drop a video on fixed versus variable and the default rates. But interestingly, if you look at the data, it's been cheaper to have variable rate mortgages. You would have saved thousands in interest on each property over a 5 or 10 year period by going variable versus fixed. So something to think about. Even in times where rates were very high, variable has tended to outperform in the last 15 years fixed. Something to think about. Maybe rates will go way up and you don't fix in just before a bunch of prime rate hikes and rate in a row, you might lose out. Like a year and a half ago, it would have been better to fix just before all the prime rate hikes happen. But over a long-term period, I think the discounts they're offering on the variable rates are very, very good. I'm seeing people get 1% below prime right now on variable rate mortgages because they're insulated. If prime goes up, they're protected, so they're giving significant discounts to the investor, to the homeowner on the mortgage. So I'm very bullish on variable rate mortgages, and I don't have enough of them. That's the problem. I fixed most of my stuff in. So regret. Hashtag regret. Okay. How would you invest $100,000? One large multifamily or multiple 1 to 4 units? It depends on the deal. You've got to run the numbers on it. I would say multiple single families will have a higher return on investment. Once you cap out on the number of mortgages you can get, you have to go commercial. It's a lot easier to go commercial to buy things than it is to go residential. Like right now I'm having trouble getting residential investment property mortgages, so I have to use investors to get those mortgages. But I can walk into anywhere with a commercial property over 6 units and get financing like that because my net worth is very high. And the property is what they look at the performance of the property in the business area, then they look instead of looking at the performance of the individual. So commercial is for financing. But as you guys know, the property tax rates as a percentage of per dollar are much higher on commercial real estate, so you have lower profitability. Insurance is higher per dollar of asset value. Your actual raw percentage is better on single family. So if you're investing dollar for dollar, 500,000 in residential, 500,000 in commercial, residential will outperform if you buy smart. It will 100% outperform. If you're doing $2 million commercial deal and $1 million in residential deals, $2 million deals bigger, it's going to obviously outperform. So you get to a point where if you're buying a lot of real estate, you can't, like it's hard to buy a deal a week residential. You maybe have to start buying commercial deal every month because you just can't find enough deals. If you have a lot of capital to deploy, that's when you move into commercial. So I wouldn't move into commercial until you have a lot of capital to deploy, until you've maxed out what you can do on the residential side. So I'm getting there, and eventually I'm going to move into the commercial side out of necessity, not by choice. Okay, great question, by the way, Spencer. Jared says, thank you. Where can I learn what you explained? You explained almost exactly what their situation is. From what I know now, they want to downsize. It's a pretty big house. Could you walk me through? Jared, you know what? I was just picking a random tenant profile, or random property profile. It's the same 5 profiles I always find in people that sell privately. So maybe I should do a video on it. Maybe we should have a chat about some of those strategies. I don't want to give everything away because, then there'll be no private deals for me. But no, I'm fine. I'll share most of what I know. I'm an open book, and there's enough money for all of us. There's enough deals out there for all of us. There's thousands of deals that are changing hands all the time. Why shouldn't my viewers and my subscribers and myself be getting all the deals for us? Why shouldn't we be getting all the deals? So that's what it's all about. Yeah, maybe I can do a video on that. It's a great idea about how do you get a really good deal on a property, and how do you work with some of those strategies. We do have the cameras rolling over here, catching some of this footage. So maybe we'll make a little video just on what I said. I think that'd be a great little clip, what I talked about there with how to get the price down. I'll just film an intro and an outro to that. What do you think of townhouse condo investing versus freehold detached homes? What are the benefits and drawbacks of both? Tommy, great question. 1 second, guys. I'm really going to blow my nose. It's going to be awkward, Turtle. Cover your mics.
That one's going on for that quick clip.
Oh, sorry, guys.
Promotional material.
No, that gets deleted forever. Please, sorry about that. I'm a sick boy. This is what happens having a 2.5-year-old daughter who coughs into your mouth. Thank you guys, the 9 people who smashed that like button. Thank you. And for the other 25 people that I've seen on here, you didn't smash the like button. Smash the like button. Share this. I'd much appreciate that. We gotta get this out here. Get the information shared. This is why I do this. I want a lot of people to find this information and to help a lot of people. Okay, Tommy, I didn't dodge your question. I just had to take a break for a sec. What do you think of condo investing versus freehold detached homes? I love freeholds, but I love a deal more than I love anything else. And so I'm not going to say that condos aren't great. The condo fees are high for what you get. So you pay more than the value you get with a condo typically is, so with a condo you'll get like your maintenance, your grounds, your grass cut, your snow removed. They'll maintain the exterior of the property. Sometimes they'll even cover the roof. Um, Sometimes they'll even throw in the building insurance, not the contents or anything inside the property, but the outside of the property. They'll have an insurance policy on that. Sometimes you get utilities included in your condo, like water, if they can't separate the water bill out, stuff like that. What I've found is that by and large, the condo fee has a lot of management. Like there's a guy who runs the board and all this kind of stuff, and they hire the like most expensive contractors to do the work. I pay a guy $20 to cut my grasses. He'll cut 10 properties for $200. They're paying a guy $200 just to show up for a half hour to whip and snip their little condo area grass. So condos tend to have you'd think they have economies of scale because there's so many units, but no, they actually are very poor at funding deals. I'd rather control that. So, but if you're a random, like a lot of females really like condos because they don't want to do any of the work and they don't want to work with trades guys and they don't want to hire a grass clipper or someone who's a professional. Like I picture someone like guy works in tech or banking. He doesn't want to have to manage trades or manage any of the maintenance or have a guy that comes once a month to cut the grass. That's too much stress for them. Then you pay a premium to have the condo fee. So you pay the condo fee, you get some services, it's nice, it's easy to manage. The condos that we own are very easy to manage. I like freehold condos the most. So freehold condos are freehold, you own the land. There is an agreement that exists between the people in the place and you kind of pool things together. It's not like a traditional condo, it's like a vacant land condo kind of thing. I like those the most. Condo fees are typically smaller, and it's possible for like someone like myself to get on the board and actually work with them and help them get the costs down to keep the costs reasonable. But with a big condo corp, it's hard to do that, and you're kind of at the mercy of the condo corp. And if their reserve fund ever gets low, right, you have the reserve fund with the condo. If they mismanage the funds and they need to put a roof on, they can say, hey, $5,000 to each condo owner right now, pay it. And I've seen that happen where the funds, it's underfunded, and they make all the condo owners pay $5,000. With my own property, I'll set up my own capital expenditure account for a roof, for a furnace, things like that. I'll put money aside, like a condo fee, but the money sits in my own account. I get to control the money. I get to decide how it's spent. I prefer that personally. So I prefer the freehold to the condo, but I found like 5-bedroom condos that are like 140 grand and they cash flow like monsters, and you can't say no to that. Sometimes some of the condos here in London are significantly discounted compared to the freeholds per square foot. And so you run the numbers, and at the end of the day, the numbers don't lie. If you can cash flow it after the condo fees compared to a freehold at the same price, the condo can make sense. So it's whatever the deal is. I'm not going to say that one is better than the other, though I will say, apple to apples, I like freehold better. I like to control things. Okay. Go up and have some more questions, you guys. It's a great question, Tommy. Great question. What happens if, and I love that we now have 14 plus likes. What happens if someone passes away and their properties are inherited by their spouse? Do you need to pay tax, or are there any fee transferred? My understanding is, and I have to brush up on tax law, and you know what, I don't know. This is not legal advice. Everything I say on here is just my opinion. It's uneducated, and you cannot sue me for it. It's disclosure. There you go. Those are just my thoughts, my random thoughts. So my thoughts are, I've heard stories where property does roll over to the spouse tax-free and does not constitute a sale. If the property rolls over to a son or daughter or a different family member, then it is considered to be disposed of, and there's capital gains that have to be paid on what is considered the fair market value. Even if the property doesn't sell, an appraiser has to come in and appraise the value. You have to declare what the value is. Typically you get an appraisal and you pay on the value up until that appraisal. So in those situations you beg for the lowest appraisal possible. But yes, you do have to sell, or you do have to pay tax. If your spouse, no. So it should roll over to your spouse. The house you live in, again, roll over to your spouse. The key thing, making sure you set up the structure, like whether there's a joint tenancy or tenants in common. I'd have to do a whole video on that, but one can roll over to the spouse in the event of a death, and it doesn't constitute a sale. So I believe it's better if you have two on title. So if you and your spouse are on title and one passes away, then the other one just assumes the other person's half, and there's no sale. But if you had a business partner or something, you have to declare tax on that. Thank you, Vital. Appreciate the like. We talked about fixed or variable. Scumbag of society can't understand me. Jared, I think the scumbag of society, I don't want to deal with the scumbag of society. I just don't want to be around that. I grew up, know this, but I grew up in that. I grew up around those people, and it's not fun. It's not fun. People are poor. They're desperate. When people are desperate, they'll do it. They're out of character. So, yeah, I don't want to. Yeah, it's not great. Um, like, no, thanks, Jonas. Okay. What do you think of the vast difference in our mortgage terms in Canada with 5 to 10 years, in the U.S. with fixed 20 and fixed 30-year mortgage? I wish we had 30-year fixed mortgages here in Canada the way they do in the U.S. They're dirt cheap. They can lock in for a long time. People were locking in their 30-year fixed in the last 2 years ago before prime went up. Those investors in the U.S. are laughing. I wish we had that in Canada. But our variable interest rates are way lower than what they have in the U.S. So I borrowed on a 2-year fixed on one of my houses, the house I lived in 2 years ago, at 1.84% fixed. 1.84%. There was a 1.5-year fixed at 1.49%. Right? People are fixing it in the U.S. at 3.7, etc. So I was getting really cheap debt here in Canada, cheaper than you can buy, or cheaper than you can get in the U.S. there. So, sorry, some messages popping up there. I'm gonna close those texts. Okay. You want to retract this message? Let's get those likes up. Yep. I'm not sure if it's just me, but anyone else experiencing lag on the stream. My apologies if there's lag. It's probably because it's so hot in this house. Tiny house is very warm, and the computer has the chip in it has a hard time running when it gets warm. So my apologies for that. It is also possible the internet is running in, and it's having a bit of a distance issue going into the house because we are out in the tiny house. I moved in the new house in September the 29th or 28th, so that would be cool when I'm in the new place. We'll see how the Wi-Fi is there, but yeah, it's kind of cool to house hack your dream house. So I want to do a video on that. I should do a video on that. How you can live in that, big 3,200 square foot house and still have no mortgage because your other unit pays for your mortgage, property taxes, and you live for free. You don't have to live in just a crappy duplex. You could have that nice life and still house hack. Okay, I'm not sure if it's just me, but the stream lag, I read that question already. Fixed versus variable, I answered that question. Just like to pay you to help me. If I have the time. This week I'm so, after this, guys, I gotta go back and start rearranging a lot of the logistics to get the renovations done on all the properties. Your thoughts on Cardone Capital and syndicate real estate investing? I'm gonna refrain from commenting. I don't invest with any of that, so I'm gonna refrain from commenting. I don't know enough to have an educated opinion. I have some vague understandings. I've watched a couple of videos and read a little bit about it, but I'll do your research. Do your research, is all I'm gonna say. I will also help you with the internet marketing. Ranking your YouTube channel, I'll bring lots of value. Jared, deal. You wanna have a call? If you can get my YouTube channel to rank and do very well, I would happily have some calls with you. I love bartering. I'd happily help you get that first deal, coach you through that process. So that's a fair deal. Spencer retracted his message. Membruza, how you doing? When are you going to apply to be a guest on Bigger Pockets? Maybe I should. Maybe someone should apply for me. Someone should reach out and say, hey, there's this Mike Rosehart guy. He would do really well on Bigger Pockets. You should check him out. And then they would reach out to me. That would be so cool if that happened organically. But yeah, maybe I should start reaching out to these people and sharing. Good idea, members. Maybe I will. Spencer Rich, how do you calculate your buy price when determining a BRRRR? Do you stick to a set percentage of the ARV Brendan Turner gave me a link to sign up at? Very cool. Very cool. Yeah, send that link over to me in a private message on Instagram or something. Spencer, or on Facebook. How do you calculate your buy price when determining a BRRRR? Do you stick to a set percentage of ARV, like 70%, like the flippers do? For me, it's more about cash flow than just ARV. So if a property cash flows well, I'm okay. 1%, 1.25% rule is like minimum. So a $200,000 property has to rent for $2,000 a month. $300,000 property, $3,000 a month minimum. And then also I look for ways I'm going to add value. So I'll budget how much it's going to cost me to do the renovation, and then I just see there's enough margin. Some deals the cash flows well, and maybe it comes out after renovations and everything. Before renovations is like 80 cents on the dollar. Renovations are 10 cents on the dollar. There's still 10 cents left over for myself. I'd probably take that deal. Anything less than that, Probably not. I like to be insulated against a correction. So that's sort of the minimum that I would go to when it comes to buying property in ARV. I don't follow the same models as the flippers. Flippers also have holding costs. I don't. So I only flip to myself. Our investors flip to ourselves. We use the bank. We flip to the bank. So when you flip to the bank, the key piece is you just get a good appraisal, right? And you pull all the capital and the equity out. You don't pay any tax because you haven't sold the property, and you get all the advantages of all of that. So, yeah, we got all of them set up. It'd be cool to be on the Bigger Pockets podcast. I'd be down to do that. Yeah, so I don't have a set percentage really. I have like some cash flow metrics. I put it into my spreadsheet. I look for 25% cash on cash on my down payment return from rental income, and then appreciation's a bonus on top of that. So flippers are money multi-family because you can keep units rented out. Single family, you have holding costs. If it doesn't sell, you're in a down market. The holding cost, if you're borrowing at 8 or 10% and you're holding for short-term period, and it becomes a longer term period, you're going to get burned on your holding costs because it's the property sitting vacant, property taxes, your financing, interest costs. It eats away all your profit. I've seen flippers in the bad market make no money, lose money. I'll never lose money on what I don't flip, but like on a burr, I will never lose money. If I don't get the refinance I want, I'm cash flowing $800 a month, just waiting. I'll pull another appraisal later. I'll wait. I'll do whatever it takes to get the higher refi out later. If I don't get the refi now, oh well. If the flipper doesn't sell when he needs to sell, it's costing him. His property sitting vacant. People keep walking through the property. So there's very much draw sides to flipping. Flipping can be very lucrative, but it's a lot higher risk. And I'm a very risk averse investor. My real estate strategy is very conservative. So one where I try to mitigate my downside as much as humanly possible. So yeah, sort of my thoughts on that. Took a course from the SEO expert that works at Disney, Coca-Cola, and Universal Studios. I'll show you how he ranks clients. Jared, that'd be really cool. I'd be so down to learn how the experts rank for Coca-Cola and all these things like that. That'd be fantastic. I'd be totally down. Yeah, Michael Chung, great point. You want to look for a risk-reward asymmetry. So you want a really low risk and really high reward. Typically what you see is like risk and reward are exactly inversely correlated. The same, sorry. So high risk should have high return, low risk should have low return. But if you can find arbitrage where you have low risk and high return, that's exactly where you want to be. So that's where I try to operate in that area. So yeah, sort of my thoughts on that. Jared, reach out to me. We should definitely do something on that. And Ben Bruza, look forward to hearing from you on LinkedIn. So that is Wise Wealth Wednesday for today. No more questions. I've got no more to share. I'm feeling a bit sick, and I got to go back out to the properties. September 1st could not come soon enough. Get everyone moved in. Get everyone, going well. This week I did not buy a property. Last week I bought a property, but I haven't bought one yet this week. It's like a confession, Alcoholics Anonymous. Guys, it's been 7 days since I bought a property. Yeah, so what's going to end up happening is I'm going to get my license very soon, and then I'm going to probably go on a buying spree and buy a whole bunch for the investors and myself. So what's going to happen is I'm going to keep averaging one a week, but this week I had all the media stuff going on, so I had the journalist staying with me for a couple of days, and the TV experience, and honestly I have a lot of logistics stuff and operation stuff that has been on the backlog, so catching up on some of that, then we'll go hard again on the growth. My job's been always focused on growing the company, and my partner's supposed to be focused on catching all of the wake that I make and kind of keeping things afloat. So until next week, guys, it's been another great installment. I'm really enjoying the questions. There's always good questions, and hopefully the solutions are good. I try my best to always give you the best solution that I can. Rain or shine, sick or healthy, extremely stressed and tired on 5 hours sleep, or fully rested, I am here for you guys. Wednesday's always my busiest day for some reason, but I'm trying to be consistent for you, and I'm trying to release now content Monday, Wednesday, Friday, each evening around 7 p.m. So tune in for that Monday, Wednesday, Friday. Trying to keep up with that. I've got now someone helping me with that too, and so big shout out to Harks Creative. He's doing a great job working with all of that. Really excited to see the channel grow. I'm trying my best to work to grow the channel as well through working on things like media. So thank you all for tuning in. It's been a great hour. If you're watching this in the replay, let me know. I would love to see in the comments, hey, I made it the whole hour, watch the whole replay, man. That was awesome. Or, You know, if you're watching, you're like, dude, that's so sweet. Thank you for doing this and sharing X or Y. Or I had this question. I wasn't there for the show, but I had this question for you. Would you put your comment in the description below? As always, you can reach out to me on Instagram. It's just my name, Mike Rosehart. You can find me on Instagram. Find me on Facebook. I have a Facebook, YouTube account, and I also have one personal account. So find me on there. Find me on LinkedIn. Instagram is a great way to find me. Check me out there. Follow me, and I share some clips of the daily life. The Patreon account is coming. Ben is coming soon. I'm going to get on that, but I've been really busy this week, so it'll probably be next week that'll come. So I'm excited to see some of the loyals subscribe to that, where we can do some private videos. I can take you into some properties where we can do some secret videos that I'm not supposed to share online, because I can't share them with the general public, because some of the stuff is sensitive, but I can share it with the Patreon followers. So I'm excited for that. What else can I share with you guys? I'll share with you my catchphrase that I always say, and we'll end with a smile. Spend less or maximize returns. Those are the 3 levers you have to play with, guys. You got to spend less, you got to earn more, you got to maximize returns to unlock a wealthier you and unlock fire. Thank you, guys. Have a great Wednesday. Thanks. OREC 2019, yeah, Matt McKeever and Jeff Weiber putting that on. I will definitely be speaking there. You will definitely get a chance to see me there, Tagger. I might even have a booth there just to support the boys. They're my friends. I'll probably throw them some money. Yeah, wouldn't be a bad idea. The tickets will not get cheaper than they are now. So go ahead and buy those. Cheers.